This is Greg with our trade blast for the 22nd of April 2020. Uh, Today we cover what happened in the stock market yesterday and what could we expect today. We kind of just have a financial focus of kind of what's going on currently as our dialogue topic for today. Uh, Thanks for joining us. This is our trade blast, which usually only goes to our Patreon supporters as well as supporters above Patreon. But because we're having some difficulty with the Patreon folks, I've chosen to put a few of our trade blasts up anytime there are technical difficulties. So I will apologize at the beginning because we tend to get more deeply into finance than general discussions on what's going on with Tesla. So, uh, and by the way, I want to thank our Patreon supporters, greatly appreciated, and our supporters above that level that it's in our trade group for the month. So first of all, we're in a countdown to earnings. Uh, as you know, Tesla announces on the 29th, next Wednesday. So we're kind of walking into that because heading in and the week following are going to be pretty powerful moving days for the stock price, and therefore really worth time and attention because of how impactful it usually is, especially sort of this round. So there are kind of two things I wanted to focus on today. Obviously, the stock market was down yesterday. I have to admit that I was a little reluctant on my show today to do our trade blast, only because what I had to say is not conventional wisdom, and therefore it's more fun to do or say what everybody else says than to say or do things that are sort of different. Hence my reticence, and I hope you'll take my comment with a grain of salt. So there's a theme that I've been thinking about all night that after yesterday that is a bit confusing for me, but it's logical, but it's kind of stupid. So what the theme is that about I want to say 3 years ago, we had an issue. Well, let's call it 4 years ago. We had an issue where oil prices jumped to $140 a barrel. So what happened is that when those oil prices went to those levels, a whole bunch of businesses started doing badly. The reason is that there are a large number of consumers who rely on, you know, oil in many ways. For example, heating your house. For example, fueling your gas tank back and forth for whatever you have to do work-wise or errands. So basically, what consumers said was, "Look, we've got a problem. The problem is that oil prices are so high / gas prices are so high that we can't afford to go out to eat. We can't afford to go to the store and buy anything other than the basic staples from the grocery store. So that's the state of things. We just don't have enough cash." So now fast forward to now, and we're in an interesting position because instead of oil prices being crazy high, we have an interesting zone where the prices are actually crazy low. So as different economies start rolling again, we're in an interesting position because we don't have the answer to exactly what's going to happen with consumers, especially if they're unemployed. But one of the ideas or themes or thoughts that you can think about is, now wait a second, if you guys didn't, i.e. the consumer, if you guys didn't have enough money when oil prices were at 140, what are you going to do with that money when oil prices are at 10 bucks a gallon or like below $1 a gallon? I think the answer to that for people who have to spend money, need to spend money with families and so forth, is that they have actually more cash to spend. So this commentary sort of goes totally the opposite of the whole idea that the stock market is crashing, therefore everything sucks and everybody's done. I'm wondering about the fact that what are the consumers that need to spend going to do when they now have more resources in their pocket with which to address their family's needs? And I think the answer is that they're going to be more inclined to spend because their overall costs are lower. And so in theory, we could follow this theme through other places. For example, there are these trucks that deliver food to the grocery stores. What's one of their key fixed costs? The cost of fuel. What's happening now? Cost of fuel is declining. So in theory, the entities that have to pay that fuel price actually have more cash, and for example, the grocery stores, and they can afford to pay bigger dividends driven by the cash they now have that they didn't have before when oil prices were higher. So if you get my theme here, the whole idea is that there's doom and gloom and you want to go with it 100%, but there's some really basic things that are just, it's not even thinking. It's like, okay, you know, come on, guys, this is a little ridiculous. So I say this because obviously the stock market is up heading into today, which is a good thing. And we like to see that. But I think there's this underlying theme of, are we in a mega crash that the market is over? Another theme that I wanted to present that I've been thinking about for the last couple of weeks and talking with friends about is just the fact that there's a concept called a market full of stocks and a stock market. So when you consider the market crashing, in theory, every stock just jumps out the window and it's over. That could happen. The other thought here is that there's a whole bunch of companies like oil companies and oil services that have gone bankrupt that will jump out the window as a group. And then once that group is done jumping out the window, the rest of the companies left is where you redeploy the capital. And therefore, those entities sort of move forward effectively. The problem with oil is that it represents, as we've talked about numerous times, 25% of the market and so forth. So therefore, they're more impactful on the general market as they decline. But I'm wondering, you know, one of the themes of oil is that 2% of the cost of everything. So if you look in this room, the TV set, you know, stuff on the wall, you know, my camera, you know, all this stuff has a base of 2% cost related to oil. So as that number drops, there's a whole bunch of, I want to say, nice elements to that emerge that represent actually a benefit to the society. So I have to say that we may get the mega crash everyone has talked about, but I can't, you know, I think it's a problem. I think it causes the market go down. Oil services are significant, but there's another side to this discussion where because it's a market full of stocks, you can look around for stocks like Abbott, like Tesla, they're doing fine, and therefore have rotations towards it. So I'll look forward to any and all comments you guys have about this, but we'll see how this plays out over the next few weeks in the stock market. I still have a large amount of Abbott positions. I think it's a great company in a great position right now, despite they had some testing challenges with old items that have been frozen versus immediate swabs, but I think that's been addressed. And then, you know, obviously the market was down and took a lot of people with them. This morning, what we're seeing is Tesla's up strong early, 22 points, 710. Abbott's up nicely as well, $150 so far. We'll see what happens in the general market. I have to admit, I'm kind of stunned by Netflix being down after 16 million subscriber increase. Wow. The only thought I had there was once you go 16 million up, how many more can you get in the next quarter after a number like that? So position-wise, I found that most of our trading group actually started buying Tesla when things were below 700 there, including myself, because I was like, man, if you liked it at 750, below 700 is a heck of a deal. So that's kind of what happened there. You know, in general, for me, it's positions at Abbott and Tesla, but I'm trying to figure out a way to get into Amazon. It's so expensive and so volatile that you know, I'd be embarrassed to say I owned it if it didn't do well, but if it does well, I'd love to say I owned it. They announced earnings, I think the 28th, Tesla announces the 29th. So talk about a barn burner day. That's going to be very interesting. I don't have the cash to mess with Amazon straight ahead, but one would love to participate in that monster hundreds of points a day run that company tends to enjoy on a regular basis. So I just wanted to note it's nothing that I plan on trading because at $2,400 a share, it's expensive. Plus the options are very expensive to go with that. So one has to be creative in how you do it, but that's something that I'm observing. So I kind of covered positions that are held by most of our group, really targeting Tesla and Abbott right now. I just think that Abbott is in a great position with a great management, and it was just announced that $100 billion is committed to testing, with Abbott likely getting a very large share of that cash. I think adds a lot to their balance sheet. So we look forward to what happens with them and the market in general here today. Hopefully a little bit better, and the early signs are good, but the way things have been going in this market, you never know day to day what's going to happen. I obviously I saw a number of you say hello. Thanks for doing so. What's up, Joey? Well, I should say bonjour, monsieur. Any rate, I I'm trying to catch any final notes here. When we do Trade Blast, the goal isn't really to do a real show. It's really just to do a blast to discuss the trading day, things that I see that might be happening. I really think that the market needs to settle down and embrace the fact that oil is screwed, and the fact that we need to get on and identify companies like an Abbott, like a Tesla, like an Amazon, like a Walmart. All these guys are doing great, so why not redirect the focus of the attention and the resources to those companies that are doing great and kind of go from there. I'm about to get into, I just got a comment we have a friend of the show named Joey. He just sent me a comment, what do I think about USO? And so I've had this weird conversation going with him indirectly for the last few weeks. What happened is I actually encouraged friends on the show to get into the buying puts on USO. He made a killing on it, which is awesome. But I was impressed because when USO was at 20, the oil price was at 20, bounced back up to 27. He made the comment to me, this thing is going below $12. And he put his money where his mouth was, and congratulations on clearing mega cash on that. I'm confused by USO because I've never heard it before, where they got so much oil that they don't know where to store it. So I wouldn't touch their puts or calls right now, because it's hard to see it going lower than $9 a gallon. I mean, it probably will, but it's hard to see it going further below that. I agree. I picked up some 750 calls on Tesla that expire on Friday. I just picked up one or two for the fun of it because it was below 700. And thankfully it's rising again, so that's really good news. The final one I wanted to make was on SpaceX. What happened is that, other than Elon, we're sort of in touch with the guy with the most shares under his control of anybody. And we're sort of, walking our way through negotiating, acquiring shares. We've had a number of you express interest. I wanted to point out that the first group, I guess we could average it out at about $5K per person for those guys to be part of our due diligence process. So we have some video that you got to watch. The problem we have is we have our first group of folks that get priority for shares. And if you're coming in later, you sort of drop in priority, obviously. There is you got to chip in to our due diligence fee zone. It's going to be in the range of 5K for that. And then you become sort of first alternate beyond the folks who actually chipped in for the initial due diligence process. So I will be sending you emails. If you're interested, please send us a note at admin@teslafaninsight.com, and we can update you on sort of what's going on with this. I have to admit that right now, most of our investors are in the 100K range. So we're kind of inclined towards a minimum of 50K at least, and then up from there, about 100K worth of expenditure in order to buy shares. It's kind of like what we want to stick with. The reason is because if we're doing a bunch of 10, 20, 25K situations, it creates chaos in terms of the volume of stuff and people we have to keep track of versus the larger blocks. If that does become available, we'll update you guys on that size of purchases being available. So what you're likely facing is probably, something in the 5 to 10K range between due diligence fees and attorney's fees for your investment, combined with whatever the dollar amount of shares is that you're purchasing, be it 100, 200K, whatever that number might be. So we're working it out in terms of legal counsel right now, as well as working it out in terms of shares. And for those of you in our initial group, as soon as we get our first allocation, we're going to be, on the phones to you very quickly on that. So I guess stay tuned. Yeah, part of the thing is I didn't want to run up a bunch of costs until we have the shares already waiting for us, but then you have to move quickly. So we're trying to work all this out process-wise. Any rate, thank you once again for joining us for our Trade Blast. We'll be back to our regular show tomorrow for sure. Interesting times, and I think a lot of opportunity to make money here. Any rate, this is Greg for Teslafaninsight. Thanks for joining us. Tschüss, macht's gut, au revoir, lehitrot, choda hafez, hey do, strasvice, ni hao ma. In Jamaica, we say enough respect, walk good. Thanks for joining us. Have a good day.